I just bought another 50 Tesla shares for $275 at yesterday's pre-market open with Interactive Brokers. This brings me to a total of 2,200 Tesla shares with an average cost price of $203. In this video, I'll share why I'm buying more Tesla stock. Click subscribe to stay updated to more videos on Tesla. Here are 3 reasons why I'm buying more Tesla stock. The first is that I see Tesla's demand scaling healthily with production. Tesla just released its Q2 delivery report, and Tesla delivered 466,000 cars, strongly beating Wall Street expectations of 447,000 deliveries, a 4% beat. Some may argue this is the result of multiple rounds of price cuts earlier in the year. However, other car companies have also reduced prices, and not all saw an increase in demand. In fact, Volkswagen is reducing EV production because of what they term as consumer reluctance. Price cuts do not guarantee increased sales. Some may then argue, what about Tesla's profits? Price cuts would surely hurt profits, wouldn't it? Now that's a fair question to ask, and let's deep dive. If we compare Q2 versus Q1 deliveries, Tesla delivered almost double the number of Model S and X, which brings in higher margins. On top of that, the new Gigafactories, Giga Berlin and Giga Austin, are now producing more than 5,000 cars a week, which puts them way above the profitability line. That means every incremental production from these 2 new factories is a significant increase in margins. Because of this, I believe that Tesla may show flat or even higher margins despite the multiple rounds of price cuts. We also have to remember that one of Tesla's strengths is its pace of innovation. Every week, there are dozens of production line changes, new materials, better parts, better production processes. All of this have a trend of bringing production costs down together, as we see now with lower raw material costs throughout the world. Second, Tesla's marketing. Tesla has just started its first ever paid advertising campaigns in the US and UK. This is a demand amplifier, especially for a segment of population that is not yet aware of Tesla's key benefits, like its safety, parity pricing ICE cars, and good range. Globally, the auto industry spends $37 billion on advertising. If Tesla spends just 1% of that, that's an advertising budget of $370 million. There's a lot of upside and low-hanging fruit for Tesla because they're starting from zero. I also believe that Tesla can use its advertising budget more wisely than other car companies. Many car companies buy billboards to attract the attention of drivers near roads. Tesla has 45,000 billboards around the world. They're called superchargers. And now, other car companies are paying Tesla for their consumers to drive to Tesla superchargers and use the Tesla app, while Tesla spends nothing advertising its superchargers. That's brilliant. Third, Tesla's future product roadmap. Tesla is now conducting winter testing in New Zealand for the Cybertruck and refreshed Model 3. I believe that Q2 will be the last quarter in Tesla's history before the release of Cybertruck. It looks so different from anything else in the street, and many people don't believe that it's real. Seeing it with their own eyes on the street will change that. The truck market is one of the most profitable markets for the auto industry in the US, and Tesla is finally entering that segment. Tesla has a strong hardware roadmap, and it also has a very strong software roadmap, which is even more profitable. Tesla is now recruiting ADAS and also autopilot drivers in many markets around the world in preparation to scale FSD beta to more markets. I believe by the second half of this year, we'll see FSD beta in new markets like Thailand, Australia, New Zealand, Japan, many parts of Europe, and even China. In a recent poll, many of you expect Tesla's Q2 earnings to beat expectations. I agree. While Tesla's automotive business is a solid core, I believe that other segments like Tesla Energy will surprise many investors from its growth in both revenue and profitability. Today, 13% of Tesla's business is non-automotive, and I believe the number will hit 20% by the end of this year. When that happens, I believe we'll see more mainstream recognition of Tesla being more than a car company. It is a company that's solving for autonomy, solving for sustainable energy, and solving for AI and robotics. Tesla has a bright future ahead, and there will be many ups and downs. If you'd like to buy Tesla stock, you can find a referral link down in the video description for Interactive Brokers. If you found this video useful, please click the like button. Hit subscribe to stay updated to more videos on Tesla.